after over a decade of economic downturn. At the dawn of the 1980s, Wall Street is ready for a change.
The economy was in rough shape in the late 1970s. So there was this general feeling that we've gone too far in government intrusion into the private sector.
The American voters elect a new president, Ronald Reagan, who promises to turn the clock back to a time when America was the envy of the world. And a major part of that plan to give Wall Street its swagger back.
That meant unleashing businessmen, bankers, and investors to use their money in new ways, to free up Wall Street, as it had not been freed up for a long time.
The regulations enacted by Joe Kennedy are under attack and leading the charge into a new era of deal-making are a new breed of Wall Street titan. Men like Ivan Boesky.
I want the money and the power and the fame forever. Try to take it from me, then I'm down and kill. I deserve everything that I feel. I won't stop to the house and the hills. I'm in my zone, yeah. Got the money, power, respect. It's been too long, yeah. And baby, don't you ever forget I'm in my zone, yeah. I'm in my zone, yeah. Yeah.
In 1981, Wall Street is full of ambitious brokers looking to make their mark, hustling to find an edge. And no one is hustling more
No, get back to work.
than Ivan Boesky,
Let's go!
an up-and-comer with plans to put his growing brokerage firm
Jason,
on the map.
come on! Pick up the phones!
What Boesky wanted was power. He wanted to be a player.
Excellent. Then that's it. It's a deal, right?
Tried to make himself out to be a larger-than-life figure. Somebody who loved to flaunt his wealth. He would take helicopters basically from his office to his estate in Westchester.
Let's pick this up in an hour.
He just wanted the world to view him as a big swinging dick.
For Ivan Boesky, there's almost no risk he won't take to satisfy his ambitions.
He seemed to be this fully fledged shark that emerged out of the ocean in the early 80s. But he was just a hungry kid from Detroit who married well.
Born into an immigrant middle-class Jewish family in Detroit, Ivan Boesky always knew he wanted to be rich, but struggled to find his way.
Boesky's parents sent him to Cranbrook in Detroit, which was a prestigious prep school. He only spent 1 year there. They couldn't really afford to send him longer.
He seemed destined for a life working for his father.
Ivan's first real job was taking over the Brass Rail, the family restaurant, in a decaying part of downtown Detroit. It was his brilliant idea to turn it to a strip joint. It didn't work and ultimately went bankrupt.
Then, in 1962, his luck takes a turn when he marries Seema Silberstein, the daughter of a wealthy Detroit real estate developer who owned the famed Beverly Hills Hotel. With family money behind him, Boesky sets his sights on Wall Street.
When he started his brokerage firm, his father-in-law basically staked him with $700,000. And he built off that and made a ton of money.
There were always those said Ivan never would have become Ivan without marrying well, without marrying Seema. I actually kind of think he would have, because I think he was that driven and that hungry.
Boesky has made his mark in the field of risk arbitrage, long considered an area of trading with lower returns. That's all changed with deregulation. And the hottest new trend on Wall Street, corporate takeovers.
Arbitrage involves buying a stock, anticipating that it's going to go up in value because of, let's say, a merger that might happen in the future. The arbitrageur will buy the stock of the company that is the target of a potential takeover. If they're right and the takeover happens, that's going to drive the price up.
You profit from the spread between that price that you buy it at and the price of the ultimate deal. And that spread can be very big, and you can make a lot of money. It all depends on when in the timeline you buy the stock of the target company.
Risk arbitrage requires deep research into companies to understand their value and the willingness to risk everything to make it pay off. A trait that defines Ivan Boesky.
You have to have very, very strong stomach. These are very short-term investments, but they're very, very intense during that time period because anything can blow the deal.
August 5th, 1981. Conoco Oil, one of America's largest oil companies, is the target of a takeover bid. Ivan Boesky has been closely watching it for months. The deal is complex and volatile.
Jason, get in here!
And could collapse at any moment.
The government can determine that there is an antitrust issue. The acquiring company can back out. Anything can happen. And you have all this money out on the table.
Why haven't I got this morning's stock reports?
Convinced the merger will go through, Boesky has gambled almost everything his firm has, looking for a massive return.
Boesky put up a lot into the Conoco deal, as high as 90%. That is huge risk. That is like putting all your eggs in one basket, something most investors would not do, not at that level.
Just have him call me at my office. Yeah, put him through. Okay, John, give me some good news. I can live with that.
The Conoco deal goes through, and the winning bid has pushed the stock price to record-breaking heights.
Conoco started at $50 a share, and at the end, it's $98 a share. So if you think about that spread, it's almost doubling your money.
It is the game changer Boesky has been dreaming of. With $40 million in profits, his reputation surging.
Given Boesky's success in the Conoco deal, that brought him a lot of respect on Wall Street, because when you're successful and that successful on a deal, it means you've done a lot of things right. It's someone who's very smart, someone who has a lot of commitment to doing the research, to doing the hard work.
Ivan Boesky emerges as the hottest name on Wall Street.
There was a time when arbitrageurs were looked down on Wall Street. As the money got bigger, as the takeovers got bigger, a lot of people were just kind of going, wow, that's really cool.
Fresh off making a fortune with Conoco, Ivan Boesky isn't satisfied. He wants more.
Power, prestige, that's really a lot of it here. You go for your first million, maybe it is about the money. But what makes you go for that next million? What it's really about is what that money sort of affords. It affords you a certain prestige, a certain class, a certain status in our society, and that becomes addictive.
Boesky has one major advantage over everyone else. No one is more persistent. Known for fearlessly calling and badgering for intel, when it brings him a new lead, Boesky plans to double down and make another massive bet. In May of 1982, Boesky is picking up signals that another oil giant, Gulf Petroleum, will launch a takeover of a competitor named City Service. Boesky starts snapping up massive amounts of City's service stock, even going $70 million into debt to do so, certain that Gulf's takeover will go through.
So Gulf bids up and the price of the stock went 50 up to 60.
As the stock price nears $63, most believe the deal is imminent. But it's called risk arbitrage for a reason. When suddenly the federal government takes notice and begins to examine the deal for antitrust violations. It begins to fall apart. And Ivan Boesky knows if Gulf backs out, he will lose millions.
Dump as much CD service as you can on the West Coast market. Now!
Boesky's traders make frantic calls to the West Coast.
Damn it.
To try and sell his City's service stock. But it's too late.
Gulf walks away. Guess what happens to City Service stock? Boom!
It's a devastating blow. Boesky has purchased 90% of his City's service stock with borrowed money. Boesky knows paying it back will bankrupt his company and leave him with nothing.
You've borrowed to buy your positions, and now your brokerage says you don't have enough capital, you need to send us money. And then what?
Boesky liquidates every other stock he owns to pay his debts. But it's not enough. Desperate to save his company, Boesky reaches out to Spear Leads, the firm that executes his trades.
So Boesky goes to Spear Leads to say, hey, could you buy some of my position so I don't literally go bankrupt?
Okay, thanks, Carl.
To protect their largest client, Spear Leads buys 400,000 of Boesky's shares, giving him enough cash to pay off his debt and saving Ivan Boesky from bankruptcy.
Ultimately, he ended up losing money, but he was protected from losing the whole thing.
Boesky has lost almost a third of his firm's assets, $24 million. And his reputation suffers. Shaken and almost ruined by circumstances beyond his control, Boesky is determined to make sure it never happens again.
There's so much uncertainty about if a deal will really close and at what price. Boesky had to rethink his business model. How could he get the risk down? How could he reduce his exposure or the likelihood of losing on a deal?
Boesky knows he needs to stay ahead of the curve. And now he's willing to do whatever it takes, even if that means breaking the rules.
That's the moment when he thought to himself, I'm going to have to cheat if I'm going to win. And that's the moment he starts to try and figure out, how can I find people to feed me information illegally?
Boesky keeps investment bankers close, constantly pushing them for new intel and to see how far they'll go.
Martin Siegel, please.
But he needs someone willing to cross that line. Someone like Martin Siegel.
Well, there wasn't much work to do on the grounds, but we spent a fortune on the renovations, you know? And art, but that's all Seema. She's got a great eye, you know? And it's a hell of a good investment.
Better than Conoco?
Let's not go overboard.
Okay if I ask a personal question?
Of course, yeah.
There were a lot of rumors about how much you cleared on that deal.
Yeah.
What's the truth?
Well, what do you think?
Every number I heard made my head spin, so what difference does it make?
Well, it's 40 million. Sometimes you get lucky.
Martin Siegel was an investment banker working for Kidder Peabody.
Marty Siegel was the elite. He was a top 10, if not top 5, deal maker on Wall Street. He was gold-plated.
With good looks, a Harvard degree, and a 7-figure salary, Siegel appears to have it all. But with takeover mania gripping Wall Street, he doesn't want to miss out on anything.
So, what's your next move?
Well, I don't know. You tell me.
Siegel is having money problems of his own, even though he's making a 7-figure salary in investment banking. And Boesky's the one who says, look, you know, you give me info, and I'll give you cash.
Caught up in the status game of Wall Street's top bankers, Siegel is spending money faster than he can make it. And he's convinced himself, even though going in with Boesky means crossing a line, he won't get caught.
At the time, in the early 80s, there was a lot less clarity around insider information and a lot less of the SEC getting involved in it. It's illegal, but there really is no black and white definition.
Ivan Boesky.
Ivan, Martin Siegel. Listen, I don't have much time, so I'll get right to the point. We're dealing with a bit of a situation here. I'm hoping you can help me out.
Of course, Marty.
I'll explain later. For now, what I need you to do is buy Bendix. Big.
Marty, can I count on this?
You'll be glad you did.
Martin Siegel has tipped off Ivan Boesky about a hostile takeover involving his client Martin Marietta and the Bendix Corporation. With one phone call, Martin Siegel knows he's broken the law, and there's no turning back.
A guy like Marty giving tips to someone like Ivan Boesky, just why? It was a crime.
Marty Siegel was feeling like, I don't have enough money. You know, like I need more money. I know that sounds crazy, but you know, people with a lot of money sometimes stop understanding what's necessary versus what's a luxury.
For Ivan Boesky, there are few concerns with right or wrong. The only thing that matters is coming out on top.
Jason, I need you to buy Bendix. 100,000 shares. That's right. I'll call if there's more.
With his winning reputation, after Boesky buys in, the market follows, driving the price of Bendix stock through the roof. Siegel and Boesky's plan has worked to perfection. Boesky gets exactly what he needs from Siegel and cashes out, turning a huge profit with little risk. But this is only the beginning. Over the next few months, Boesky gets more inside tips about impending mergers from Siegel, making huge profits and cementing his reputation as Wall Street's king of risk arbitrage. As Boesky reaches new levels of success, making untold millions with every deal, Martin Siegel is only taking a small cut and can't help but wonder if he's made the right move.
Insider trading is one of the most unfair and damaging practices when it occurs, because you've made money, and that's not because you're particularly skillful. It's just because someone told you things you didn't know.
When you have confidential information about your client and you share it with somebody and you know that that person is going to act on it, both you and the person you tell know that you're doing something wrong.
Sonia, cancel my afternoon appointments.
Fearful of a paper trail, Siegel insists that his $150,000 payment from Boesky be made in cash.
It's sort of mind-boggling. It's like, cash? That's how you did it? And of course, that's one of the things that made this so sexy.
Ivan Boesky knows his payments to Siegel are the best investment he's ever made, and the two continue their secret partnership, making millions along the way. While Boesky has become the biggest name in risk arbitrage, another man operating from his office 3,000 miles away has become the most powerful Wall Street titan since J.P. Morgan. His name is Michael Milken. Milken is the head of high-yield securities at the investment bank Drexel Burnham and Lambert. And he has completely changed how money is made by doing things his way.
Michael Milken was far and away not only the most important person on Wall Street, but arguably the most important Wall Street financier since the crash of '29.
But he didn't start out a titan. He grew up in a middle-class Jewish family.
He had the purest life imaginable. He was married to his high school sweetheart. He was home every night. He never had a drink in his life, never smoked a cigarette, never took a drug.
Yet, there were clues to his future potential, both to his ruthlessness and to his genius.
He was a high school cheerleader, and he was attacked once in a local newspaper because he called for more points when his team was ahead 42-0. At Berkeley, he could do math like, a genius in his head.
In his first year on Wall Street, Michael Milken's detailed statistical analysis reveals a stunning insight. The market was missing a potential trillion-dollar opportunity: junk bonds. Bonds for lower-rated companies with a higher interest rate were actually a better investment.
What Milken understood was that these credit rating agencies looked at historical performance. And these companies that needed financing couldn't get it in traditional Wall Street routes, didn't have that performance to show. But what they had was future potential.
It was an imperfection in the market where the banks just would not take risk, even though there was money to be made if you took risk against a portfolio of these smaller businesses.
Warren, it's Mike Milken. Are you still asleep? It's 5:30. Yeah, but there's a situation in Tokyo that I really need to discuss with you, but you're not here. No, we'll discuss it when you get your ass into the office. Where you should have been half an hour ago?
Soon, Milken is generating hundreds of millions of dollars through the groundbreaking new junk bond market he's created.
He was doing thousands of transactions a day, following thousands of companies, coming in at 4 in the morning, beating everybody to work. He had a phenomenal ability to just be a work machine.
What he did was create an entirely new business that created an entirely new phenomenon of takeovers that changed corporate America, and to a degree, America, forever.
By 1984, Drexel Burnham is bringing in over $1 billion in revenue, with Milken's junk bonds accounting for more than half. He earns tens of millions of dollars in bonuses for himself. Milken's statistical genius is eclipsed only by his vision. Milken believes he can reshape the entire American economy, beating the financial elite at their own game.
Michael Milken was motivated by money, but he was also really ambitious to build something of stature and something that would last. He wanted junk bonds to become a commonplace vehicle.
He was able to create a market where it didn't exist. So suddenly you have all these companies that were able to raise the capital that they desperately needed to grow. And that was made possible by Mike Milken and the junk bond market.
Michael Milken has created a multi-billion-dollar market from nothing. Something Ivan Boesky can only dream of. And unlike Boesky, Milken did it quietly. The two men couldn't be more different. Boesky is self-serving, while Milken is loyal. So when Ivan Boesky reaches out,
This is Carolyn.
Give me Michael Milken at Drexel in LA. Let me know when you have it.
Michael Milken.
Milken isn't interested in what he sees as a dangerous risk-taker. But Ivan Boesky knows that with Milken's genius and his fearlessness, they can make Wall Street history. Boesky refuses to take no for an answer and flies out to LA to meet with Milken in person and convince him to fund his next big move.
What Boesky wanted was power. Mike had the ability to bring him into the club, and Mike had the ability to finance him.
I'll put it to you as simply as I can. High-yield bonds reward hard work and preparation with a sense of certainty. Stocks depend on investors' collective perceptions of the future. That's an unknown. It's uncontrollable. Bonds have a maturity date. So if I'm right, and I usually am, I know how much money I'll make when I buy them. That level of certainty is priceless. Perfect. I'll pass you off to Gary, and he can write it up.
You sold me.
If you weren't already sold, you wouldn't be sitting there. I'm the one who needs convincing.
Okay. Good place to start. Beverly Hills Hotel Corporation. It's a clean balance sheet, and I own it.
I'm listening.
Boesky surprises Milken with an asset too valuable to ignore. Boesky and his wife Seema own her late father's small chain of hotels, including the world-famous Beverly Hills Hotel. Boesky knows it has real value and offers it as collateral to get money from Milken. Milken is surprised by a deal backed by such a solid asset, so he has no hesitation, issuing junk bonds worth $100 million.
Excellent. Then that's it. It's a deal, right?
Now, armed with $100 million of cash to invest, Ivan Boesky is bolder than ever before. Profiting from takeovers by companies such as General Foods, Nestle, and Texaco, each deal makes Boesky a bigger legend on Wall Street, and he loves every minute of it.
Jason, get in here.
Boesky was just a greedy SOB. I mean, that's what he was. He really was all about the money.
Ivan Boesky, Wall Street's biggest independent speculator, and according to Forbes, one of the richest men in this country.
Ivan Boesky's ego, lavish style, and success have made him the toast of Wall Street. With every winning deal, more and more investors follow his lead. But now, all that attention has created a problem. After 2 years of trading cash for inside tips, people are beginning to ask questions about Ivan Boesky's amazing run.
There was an article in Fortune magazine that talked about Boesky and his success and also his business relationship with Kidder Peabody, which clearly caused people who were watching Boesky and wondering how he was so successful, thinking about, is that a way in which Boesky is getting his information?
For Martin Siegel, Boesky's key inside information source, all the attention, is giving him cold feet.
Yes.
Ivan Boesky, line 2.
Tell him I'm out of the office.
I'm sorry, he's not in the office right now. Can I take a message?
Just have him call me at my office.
The article centers on the $28 million profit Boesky cleared in Nestle's takeover of Carnation.
There were suspicions about him, that he was a little sleazy. And there were people who thought maybe Ivan Boesky was gathering information in a way he should not have.
While Martin Siegel had given Boesky inside information on the deal, the article doesn't mention him by name. Yet, as the star mergers and acquisitions banker at Kidder Peabody, Siegel is worried it could still put him on the SEC's radar. The SEC, head of enforcement Gary Lynch has heard all the rumors about inside trading, but he is fighting an uphill battle.
Insider trading is very difficult to prove because you have to connect a lot of dots. The way people buy stock, they can buy it on rumor, they can buy it on research. You don't know the reasons why someone is buying a stock. It's pretty hard to associate any kind of fraud with such activity.
Stepping away from an unsatisfying job as a corporate lawyer, Gary Lynch is driven to safeguard the market for the average investor.
Gary Lynch was tenacious in his job in protecting investors. He was aggressive, he was fair, and he knew the industry that he was operating in.
Lynch is determined to gain control of a Wall Street he sees as a runaway train. Knowing how difficult an insider trading case is to prove, Ivan Boesky isn't worried about the SEC, but he could have a problem with Michael Milken. With millions in interest payments owed to Milken, Boesky knows he can't afford to let Martin Siegel and his insider tips just walk away.
Martin Siegel's office, may I help you?
Ivan Boesky for Martin Siegel.
One moment, please.
Yes.
Ivan Boesky, line 1.
Tell him I'm on the phone.
I'm sorry, he's on the other line. Can I take a message?
I'll hold. For as long as it takes.
Okay.
Yes.
He said he'll hold as long as it takes.
Fine. Put him through. Hey, Ivan.
Well, well, well. He's alive.
Sorry I haven't been able to get back to you. It's just...
Why don't we get some lunch? Any day you're free. Café des Artistes, my treat.
I don't know, Ivan. It's just really busy right now.
You know, Marty, you keep brushing me off like this. My feelings are gonna get hurt.
Oh, I'm not brushing you off. It's just the work.
Marty, you wouldn't want me to get my feelings hurt, would you?
Look, Ivan, I gotta go. I will call you back soon. I will.
A deal that seemed like it could go on forever is now a bitter standoff. Ivan Boesky needs Martin Siegel's information. But Siegel wants nothing more than to get out. For months, Siegel avoids Boesky. But as the end of the year approaches, he needs more money. With renovation costs to his Manhattan apartment approaching $500,000, Siegel is looking to collect what he is still owed for his insider tips to Boesky, $400,000.
There's pure greed. And then you have people who have a weak moment and decide that it's just going to be easier today if I do something wrong. And they always think that they're going to correct it. And that's not the way it works.
Boesky agrees and sets up the money drop to Siegel.
At 9 a.m. sharp, go to the phone booth, pick up the receiver, and pretend to make a call. While you're on the phone, the courier will stand behind you pretending to be next in line. He will place the bag at your left leg, then disappear.
With Siegel paid off, Boesky is hoping the flow of inside information will turn back on. But after getting the payment, Siegel's fear of the SEC and a guilty conscience finally win out. He cuts off all ties with Ivan Boesky.
Martin Siegel enjoyed the money, but at the same time didn't like the fact that he was doing it. He had a moral compass.
Now, without Siegel's tips, Boesky's worried he won't be able to generate the profits he needs to make his massive interest payments to Milken. Just as Boesky's looking for a new inside connection, he meets Dennis Levine. Levine is a new mergers and acquisitions banker at Drexel Burnham, who's been making millions illegally trading insider information. And he knows he can make even more with Boesky on his side.
Here's my proposal. 5% of any profit.
What if I already own the stock?
The information is still valuable. Okay, for that, 1%.
That seems fair.
Ivan, I am nothing if not fair.
Then I'm sure you'll agree, in the unlikely event I lose money on a tip, it comes out of your share.
I can live with that.
Ivan Boesky has his new information source. And Dennis Levine wastes no time showing he means business. Levine tips Boesky off about a massive merger between R.J. Reynolds Tobacco and Nabisco, with Boesky buying heavily. Once again, all of Wall Street gets in on the game, driving the price of Nabisco higher. When Reynolds' $4.9 billion takeover is complete, it's a record-setting number for non-oil companies. And Boesky cashes out, having made millions in profits. With a new inside connection, it looks like Ivan Boesky's winning streak could go on forever. The stock market has continued to hit record numbers. And in the era of rolled back regulations, it's easier than ever to get away with breaking the rules.
I think the motivation for people to go past the boundaries really is a feeling that they know something that the regulators don't know or don't understand. This time, they're going to get away with it. I think that Boesky certainly was one of those who felt he knew more than the regulators. Sooner or later, the regulators catch up.
Meanwhile, at the SEC, a few outliers are raising suspicions. After an article appears in the New York Times questioning the effectiveness of the commission, as head of enforcement, Gary Lynch takes it personally.
Hey, it's Gary. Got a minute? Yeah, something just came across my desk I think you should see.
Gary Lynch was very much a straight-up person. The way in which he conducted himself, going after these kinds of cases, going after fraud, going after financial criminals.
he increases staff and steps up enforcement, targeting the investors whose success seems just too good to be true. Wall Street's biggest dealmaker, Michael Milken, has never worried about the SEC, because nothing he does is illegal. But the junk bond market Milken created is now full of imitators. With the rest of Wall Street using his strategies, they're catching up. For Milken, the pressure is on to stay one step ahead of the competition.
Mike Milken was extremely competitive, covetous of what he had created. This was his baby, and he didn't want anybody else to worm their way in.
Milken decides to bet on his biggest underdog yet, a man disrupting an industry of his own, a brash Georgia cable TV entrepreneur named Ted Turner. And he has just unveiled a new 24-hour cable news channel called CNN. Now, Turner is looking to expand his empire by taking over MGM Studios.
Ted Turner had trouble getting the funding because the traditional banking industry said, you don't have enough income to buy MGM, and what are you going to do with MGM as an upstart cable company? And Michael Milken came along and said, hey, Ted Turner, I'll help fund you to buy MGM.
But with both companies on shaky financial ground, Milken struggles to find investors to fund the $1.5 billion takeover. One of the biggest deals of his career is in danger of falling apart. Now, Milken needs MGM to appear stronger.
One way that you could influence that would be by making it look like there was demand for the stock. And if there was demand for the stock and the stock price went up, you could say, well, look, everybody thinks that this is a good deal.
Knowing a loss on MGM will be a major setback, Milken is forced to think outside of the box and the law. He needs to manipulate the stock price, and he knows just the man to make it happen. He places a call, asking Ivan Boesky to make big buys of MGM stock.
Boesky buying stock certainly sends a signal that there is a higher probability that the deal will occur.
With Boesky buying, other investors immediately dive in, driving up MGM's stock price. Soon, Milken's skeptical clients fall in line and start buying the bonds. While the scheme works, it also breaks the law.
Clearly, they didn't want the information to get out that it was Milken behind it. That's not only unethical, it's illegal.
No one is aware that the stock is being manipulated by Milken and Boesky. And when the dust settles, Turner buys MGM for $1.5 billion, funded entirely by Mike Milken's junk bonds. Boesky and Milken cleared $3 million in profits from the stock trades. But that's nothing compared to the $66 million Milken receives in commissions. Michael Milken has reinforced his title as the undisputed king of Wall Street.
Michael Milken, he didn't feel he was cheating. He felt he was actually building up a nascent cable industry that would become important and powerful and provide consumer services to the public.
The Turner deal is big, but with their scheme to manipulate the stock working so well, Milken and Boesky are just getting started. With Boesky doing the buying to pump up the stock price, Milken pushes through a dizzying series of junk bond-funded takeovers.
They got to the point where all he had to do was write a letter saying, I'm highly confident that I can raise the money. That's all the raider needed, is this piece of paper. They didn't even need the bonds. They just needed the highly confident letter.
Milken and Boesky are making millions, leaving a broad path of destruction in their wake.
A lot of the takeover battles were driven by ego and greed.
These corporate raiders, they'd go in and literally hollow out the company, fire a ton of people, and then they'd burden these companies with the debt. It literally bankrupted companies.
Some companies need to go out of business, but these were financing techniques that were madly and wildly overused on Wall Street in the 80s. They were applied to companies that did not fit the bill, in large part because investment banks made so much money doing them. This stuff didn't need to be done.
For Ivan Boesky, all the talk of greed run amok on Wall Street is just noise. The money he made working with Siegel and Levine doesn't come close to the millions he's banking from his alliance with Milken. And it doesn't seem like there's anything that can stop them. But in a small office across town, SEC agent Gary Lynch is about to catch a break. A tip that reveals a potentially massive case of insider trading.
This is Gary Lynch.
A tip that Lynch knows could bring a Wall Street titan tumbling down.
Gary, Harvey Pitt here. I'm in the Bahamas and I have some news. My client is prepared to reveal the name of the person responsible for all the trades.
What kind of name are we talking?
Trust me, Gary. He's a whale.
A case is brought that uncovers corruption at the highest levels, pitting the government.
I don't like being lied to, Harvey.
Join the club.
Against Wall Street's biggest players.
This is really just all a big misunderstanding.
It isn't.
Turning them against each other as they fight to survive.
Ivan, you're gonna need to cut a deal.
In a showdown with billions on the line.
This whole place could be bugged.
There's nothing they won't do to stay on top.
Milken's gonna kill me.